If we look at Dallas and Houston, what's interesting to us is the drastic increase in renters was driven by the baby boomer population. Now, that age demographic has not historically been a renter. And if that trend continues, we'll probably have to address the additional tailwinds afforded by baby boomers who desire to walk away from the burden of home ownership and walk right into a Class A apartment in Frisco or in North Austin that's overly amenitized.
I'm here today with Dan Oberste, CEO of BSR REIT. Thanks so much for joining us.
Oh, it's my pleasure.
What are you seeing in terms of supply outlook, and how is that impacting resident turnover, rent levels, and new development going forward?
You know, I think that supply in our markets, at least, was a little bit of yesterday's news. However, supply in the South, much like a hurricane, can create headwinds at the beginning when it comes on, headwinds to occupancy in a certain class of properties and rate. We entered into that headwind stage from 23, 24, and then we saw supply peak in Q4 of 24. I call that the eye of the hurricane. Now we've flipped, and new deliveries have fallen off of a cliff. New permits have fallen off of a cliff. And so we're seeing less and less supply in our markets as the fundamental problem. And really, the issue becomes what to do with all the absorption in our markets, especially in a time where homeownership has never been less affordable. And we continue to see a tight labor market, but job growth within our three markets, our three primary markets in Texas. So to me, all three of those add up to the market in general in the South is what were headwinds in a hurricane are now becoming really significant tailwinds with a 2 to 5 year tailwind time horizon behind that sector. Now, I think that people who own luxury or Class A apartments, similar to what BSR owns, in the fastest growing the fastest growing cities in the nation, in Houston, Dallas, and Austin, inside those submarkets, supply was never really an issue. We maintained our occupancy. What we're seeing now is tightness and positive tailwinds in the rate. The rate improvement is evidenced by I think we just increased our rates 230 basis points sequentially as we reported today.
And can you point to an interesting transaction or development that will be impactful for BSR REIT in 2025 and beyond?
You know, I can. I know you said or, but I'll tackle the and. From a transaction standpoint, I would point to our most recent transaction with AvalonBay in the first and kind of straddling the first and second quarters of this year. I think it's a good example of a unique way to handle a structural imbalance within a REIT. I think to a certain extent, it provides a roadmap to public and private operators with similar dual class structures on how to address their own capital stack. But most importantly for BSR, I think it's just another example of a way that the BSR team has found a way to adapt in order to grow or to identify unique ways to drive total unit holder return for our investors. Now, as it relates to an interesting industry development that we haven't yet seen in the past that we're seeing now, it's the rise in millionaire renters. 2019 through 2023, the millionaire renter, those people that earned more than $1 million a year as a percentage of renters increased 300%. If we look at Dallas and Houston, what's interesting to us is the drastic increase in renters was driven by the baby boomer population. Now, that age demographic has not historically been a renter. And if that trend continues, we'll probably have to address the additional tailwinds afforded by baby boomers who desire to walk away from the burden of home ownership and walk right into a Class A apartment in Frisco or in North Austin that's overly amenitized. We're fortunate in that we own quite a bit of those properties.
And what do you see the biggest opportunities for BSR in the next 6 to 12 months?
I think there's one. I think the biggest opportunity for us is to be able to source, identify, secure, and close on the lowest cost of capital available in the market. And then it's as simple as taking that capital and deploying it into precisely what we've been acquiring since 2020, which is new or Class A lease-ups in the suburban corridors of these Sunbelt markets that are exhibiting just generational population growth. If you get in the way of population growth, it is extremely difficult not to make money, right? And if you can secure low cost of capital and place it with our best-in-class platform right in line of that population growth, good things are going to happen for us. The risk is that we don't secure it fast enough, because we will miss what we think is a 20 to 30 year cyclical buying opportunity that's occurring right now over the course of probably the next 24 months.